Hey guys, welcome back to the channel. We were trading options until we hit $1 million. I'm recording this one on a good weekend, 2/14. Happy Valentine's Day to all. I'm about to go camp with some of my friends and go climb a mountain. The mountain kind of looks like this 3-year chart here on my stock portfolio. The count is currently sitting at 266,000, and as you can see, Friday was a pretty green day at over about $5,500 or about 2% gain. It's been a volatile week. The VIX is over 20, which is good for premiums and option sellers such as myself. And it was an eventful week, so I'll get into it. We are just getting into the numbers. I mean, we are still down 2026 year to date, coming from a very strong year of gaining 42,500 or 15% in 2025. And this week has been pretty volatile. I mean, every single day when I log into my account, I see plus 5K, minus 10K, plus 10K, minus 5K. I mean, it's the AI fears, a lot of market news, a lot of Fed reports came out this week. Lots of news driven and macro events that have been driving the market up and down. But we stay the course, we stick to the plan. We were up this week 2.6K or about 1%, and we collected $747 in premium. Actually, just before recording this video, I have like a trading journal where I log all my trades, and I have been for the last 36 weeks. And I was curious, like how much do we collect off the strategy per week? So I added everything up and divided it by 36. All my premiums gained these last 36 weeks that I've been tracking it, and we're sitting at right about 1K per week realized in cash income straight to the account or the pocket, however you want to look at it, which is good to know. I mean, eventually, I do work a 9 to 5 job. I grind away, and that's not my long term goal. So eventually, my goal would be to live off the income of this portfolio. So this is a good trial period to see if I can. So 1K a week is pretty good cash. I mean, 4K a month for the last 36 weeks that I've been tracking it. That is livable. But getting into it, we got a dividend from Nucor, little $56. IBIT, Bitcoin ETF collected $109, and CLS, $582, which we'll get into later in this video. So as usual, what are we doing in this account? We are doing the wheel selling option strategy, where we start at the top, where we sell put contracts, collect a premium upfront, and if the stock that we sell, the put contract all falls below a price by a certain date, we have to buy 100 shares at that strike price that we sold the contract at. So when assigned, we get 100 shares, and then we turn around and we sell calls, still collecting income while holding the shares. Hopefully the shares appreciate, go above that strike price, whatever we sold the call contracts at, and then we have to sell 100 shares of that stock, and then we just repeat the cycle, collecting income and premium along the way and some appreciation. And as usual, this content is not financial advice. Please consult a licensed financial professional before making investment decisions. Getting into the news, this is what's been driving the volatile week. I mean, the Dow, starting off early in the week, the Dow slid 600 points, S&P 500 falls, the indices had a red week because of AI disruption fears. This is due to the Claude AI and a lot of the software companies. Basically, they call it vibe coding, where a lot of these this new AI tool is coding for these software companies. It's literally this AI tool created an AI tool. I mean, it created itself, which is creating a lot of fear. What does this mean for all the software companies? What does it mean for their software? Is it just going to be created by AI? And where's the improvements? Where's everything that's that they're working towards? What's going to happen? It's just a lot of fear. Nothing's really super based, and nobody knows what's going to happen, right? It's just people are anxious, VIX is spiking, people are going in safe havens. It's causing fear and volatility in the market. And then some more news, which came out Wednesday. Healthcare work propels U.S. to strongest job growth in more than a year. So this actually lowered the potential Fed cut for interest rates, because if there's a strong job market, there's no really need to cut interest rates, right? But if there's weak jobs, weak labor market, then the Fed wants to cut interest rates to improve the job market. So this was a huge revision. Unemployment fell to 4.3%. I think it was 4.4% previously, and 130,000 jobs creation. So big revisions to cut totals for 2024 and 2025. I mean, I'm skeptical. There was I think it was like the largest revision in years. I don't know if you guys see this economy, if you live in the US and you just have friends, how many are unemployed, how many are looking for work. I mean, I think it's rough. I think the job market is not in a good spot right now. If you have a job, stick to it. Nobody's job hopping I know during COVID it was super popular. Job hop every 6 months to a year. No one's doing that. Everyone who has a good job, they're just sticking to it. So I'm skeptical on this job growth and the labor market, but we'll see once more Fed data comes out and how we're trending. But probably won't be a Fed rate cut until a new Fed chair, Walsh, comes in, and probably that's going to be in June. And then S&P 500, little close after soft inflation report that came out Friday. Inflation fell, which they were very worried about. Jerome Powell said that the Trump tariffs were going to see a spike in inflation in these next quarter or two from all the Trump tariffs that he installed. And so far, inflation was soft, came in lower than expected again. So that is actually, mixed signals, because that's good for a potential Fed rate cut decision. That's pro cutting rates. This is kind of the meme of the week. Are you winning, son? So, am I winning? We'll see. We'll find out next week. Slowly recovering from the big dip. So going into current activity, this is one of the blue chip companies that I like to trade on my stock portfolio account. And JP Morgan Chase, that had a big drawdown due to the Trump decision on capping credit card interest rates to about 10%. I mean, currently they're charging 30 to 35%, just insane rates for and who carries credit card debt? Not rich people. It's hurting the middle class. It's hurting the lower classes in the U.S. So this would be good for the overall consumer, but bad for the credit card companies who are making, and the financial institutions who are making a lot of money off of this interest on credit card debt. And so I traded this last week and the week before, and now, so we've been collecting pretty consistent income. It's been trading in a range, but I couldn't resist. I saw this nice bounce off of the 200-day SMA, the RSI below 40, 3 days in a row red, almost 4, then the strong bounce at this kind of supply zone, this support. So I sold a $295 put that we're up about $114 right now, or 15% of the total that we can gain from this contract. So expiration March 13th. I think it's going to have a very strong day next week. Go right back up to the 315s or 320s, depending on macro news, of course. And that's what we're selling for 50% profit. So this is a nice, $400 in one day to the pocket collected. Celestica, this was both a buy sell and also a sell to open a new put contract. Same strike price, 250. This was over a 50% gain on Celestica, where we realized $582, and it was early. It expires I think it was closer to actually 65% gain of the total 100% that we could collect, that we sold. So 250, put up $25,000 in collateral. We would have to buy, if the stock dipped below $250, we would have to buy by March 2nd, that is, or excuse me, March 6th, we would have to buy 100 shares of Celestica. This is a switch company that makes the switches for data centers. They have 60% of the market share. And, they went down this week. I mean, they've been range bound for a while, but even though they've had super strong demand and backlogs, they went down because their competitor reported weaker earnings than expected. They missed guidance, and they reported not as strong as demand for switches. So that could mean that the market is flattening in data centers, which I doubt, because everyone has a well, not everyone, but a lot of these quality companies have a backlog on all these supplies that go into building the data centers and components. And Celestica, that could mean that they are gaining market share, and everyone wants their switches, their quality components in their data centers. That could that's what that could mean. So we'll see where things go, but I'm happy to own this at the $250 strike price, below this, well below this support zone. If you want to go more aggressive, you could go to the 260, 270, but the premiums are high since this is a volatile company. So I'm playing it a little safer and doing the 250, which is above the 200-day SMA, but it's in this kind of supply zone over here in the past. So I think that'll serve as a another support if we fall. But time will tell. Make your own decisions. Don't just follow me blindly, and do your own research. So going into the current portfolio, Friday was an interesting day for Nucor Steel because Trump actually announced that he potentially will roll back some of the steel tariffs on other countries, which does hurt Nucor because Nucor is a domestic U.S. steel company, the largest steel company in the U.S., the number one. They're the ones supplying all this, well, not all, but a lot of the steel to all these huge data centers, to the semiconductor plants, to domestic manufacturing. I mean, to housing, commercial, everything that takes steel, and we are up 12.5% on the shares that we've been holding for about a year and a half now. And we've been, doing covered calls. So we sold a call at the 195 to collect income while we hold the share, as well as the dividend received, $56. They pay a quarterly dividend. So we're up about 50%, but it expires this week. So I'm just going to hold till expiration. And I'm happy to sell at this 195 mark, which is close to an all-time high. But I think, honestly, the stock might break in the 200s, 205. So we'll watch the price action this week. If this $195 call expires and the stock price is close to the 200s, I mean, we're going to sell at 205. We might sell a 210 covered call expiring in a month. So collecting income, but total up about open P&L of about $2,100 on Nucor Steel. Now, Robinhood is my largest loser right now. They had a pretty, they missed guidance. They missed their revenues. They had their earnings report, and largely due to crypto and crypto trading volumes. Crypto price has been falling. We'll get into that later in this video, but it's been, some call it a crypto winter. It's been a bear market these last few months for the crypto markets. And if crypto prices is lower, all these crypto trading platforms like Robinhood experience lower trading volume. Lower trading volume means less commissions and less revenues for Robinhood and for these trading platforms, these brokerages. So less revenue in crypto has been hurting them. But I will note, it's been interesting seeing earnings reports from other companies, not necessarily brokerages, but a company like DraftKings, who reported their earnings, and they missed. I mean, their stock went down. They're saying that other companies are taking their market share away from sports betting, and these prediction markets are a concern. And who has prediction markets? Robinhood is a huge company that rolled out prediction markets. It was Super Bowl weekend last weekend. I mean, that was not rolled into their current earnings report, so we'll find that out next quarter how that went. But I think the prediction markets is a huge, and I think Robinhood is one of these companies that's taking away the market share from other companies like DraftKings. So we've been DCAing in. We sold a couple put contracts at 100 and 110. So that's where our cost basis lies. I think it's at like 102, 103. No covered calls open right now. I'm looking to see the price action on this stock. I mean, RSI dipped below 30 again. It had a nice bounce and then right back to a dip below where they dropped post earning call. So, we're not selling any calls yet because this has a gap to fill. I think it'll go up, but it's trading well below the 200-day SMA, well below the 90-day SMA. So closely watching the price action, but I think stocks tend to like to close gaps. So there's this one gap at about in the 80s, and then there's this other gap in the 90s, so at the high 90s. So I'm looking to see a nice bounce. I think the stock is crazy undervalued. It hasn't been, by the RSI indicator, it hasn't been below 30 on this time frame, other than the earnings dip and then this week's dip. So still looking at the price action, but Friday was a nice green day. I mean, wow, we were down almost 10K on the stock, but currently down 27%. It hurts to see, but we're trading to the plan and watching the price action. I think this is a quality company, and I think this is a healthy dip, but we'll see if buyers step in and drive this price up, or we'll sell covered calls in this area. But premiums are just too low right now in my cost basis. So looking to see how that goes. We'll update you guys. Talon Energy, we're up over about 82% on this, or 1.15K. And this has been pretty range bound. It did dip below the 200-day SMA about a week ago, which, I personally, I just couldn't resist. I saw one of these days when it touched the 200-day SMA, or maybe right above it. It had another like 4% down day, and I sold a 345 put, which is a little aggressive. It's at the support zone. As you can see, it did dip below. I was in the red on this position for a bit, but it's been going up. It's back up to the 90-day SMA sitting at 376, and you're wondering, why haven't I realized this trade? Well, $345 put expiring February 20th. We only have 1 week till expiration. So sometimes I ask myself, I think this contract still has, $300, $350 left to go. Would I take this trade, 345, 1 week of holding for $350? And I would. That makes sense. But if it was like, let's say 50% and I had 3 weeks left on the contract because I sell monthlies, that wouldn't make sense. I would realize that. So, but do your own risk management, trade how you want to. This is just what I do. But we'll see. I think it will pull back a little bit I think it will go back to the 340s, 350s. So if we get a sign Friday, I'm also happy to take assignment. But we're watching this and very in the green now. And now Bitcoin, the crypto winner that has been dragging down Robinhood, that has been dragging down SoFi, that has been dragging down, of course, my Bitcoin ETFs. And I do IBIT, which is the iShares Bitcoin ETF, and I also do BitX, which is a 2x leveraged Bitcoin ETF, which play very cautiously. You could lose a lot of money doing that because it moves 2 times the amount that Bitcoin does daily. Not exactly, but follows that. It's a leveraged product, so it decays over time. It's not meant for long-term holding. It's meant for short-term trades. But just a warning, fair warning for that. So this is actually a new time frame. This is by 1 month, and as you can see, we've had 1, 2, 3, 4, 5 straight red months of Bitcoin. This is the crypto winter, and the total drawdown, peak to trough, has been 52.5%. And you can't see it on this screen, but if you look at the previous time frame, it has been the peak to trough has been 78% drawdown. So I'm prepared for that. I mean, Bitcoin might go down after, it's had a nice little bounce up here in the supply zone, but I'm mentally fully prepared for Bitcoin to go down another 25%, including this, that would, be another 35%. So mentally fully prepared for that, but right now it's sitting at 70K, and this is a good sign on the monthly chart. We'll see if it sticks. That, the month still, it's only February 14th as of recording. It still has a long way to go, but this is a good sign that this is a nice strong buy area from the previous resistance and consolidation zone. From right here, the resistance and consolidations, and right here, the consolidation zone. So this is a good sign that buyer pressure is up. So sometimes you just need to zoom out, and look at the bigger plan. And this is my second largest loss to date. So this has been dragging down the portfolio. Bitcoin's about 12% of my overall account. So it's significant. I'm not going to lie, and it hurts to see this, but I want to be fully transparent with you guys. And this is, I bought the dip. I know a lot of people were buying the 120s. So I think I'm in a way better position than that. I was buying down here in the 80s. So still, be cautious and have your own risk management trading plan. But this is just what I'm doing and fully prepared for. And it's good to look at historicals, even though they don't necessarily guarantee future results. So this is how we're sitting compared to the indices. S&P still slightly in the red this year in 2026. I'm very in the red, 6.18% after a strong 15% gain last year in 2025. But we are fully deployed. I mean, we're sitting on only $4,000 cash. So this is the current portfolio. We have a lot of options, a lot of contracts expiring this week in February 20th. So might lead to assignments if it's a red week. But if it's not, it's going to be a pretty green week with a lot of realizations. So we'll keep you guys updated on that, but we're still buying. I wish I had more cash to buy, but now we're officially fully deployed, and that means a lot of volatility in the market. So we'll keep you guys updated with that. We are sitting at 26 of the way there. As usual, thank you guys so much for tuning in this week. I appreciate all the subscribers. I appreciate all the comments. Good luck trading out there, and I'll see you guys next week.